Welcome to the 5 Dumbest Things on Wall Street, where each week we highlight the follies of the financial world's best and brightest. Wall Street's best and brightest, huh? Paradox much? Okay, number 5, Buffett's loony lunch. Another year, another moron with money to burn. Some anonymous, well-heeled schmuck shelled out almost $3.5 million for a steakhouse lunch with Warren Buffett last Friday, setting a new record for the annual charity auction and, in our view, stupidity. The winner, loath as we are to call him that, topped last year's triumphant $2.6 million bid by hedge fund manager Ted Weschler, who also ended up getting a job with the billionaire investor. Well, that's one way to get a job, kids. Just buy it. Come on, guys. Let's end this thing already. Paying millions of dollars for a lunch reservation, as if the 99% needed another place to protest. Now you'll have them occupying OpenTable. Okay, number 4, Zynga's Pac-Man moment. Will somebody please tell us why there's such surprise over Zynga's recent meltdown? Maybe it's because we're old enough to remember when Pac-Man fever finally broke, but we simply don't see it as shocking in the least. Shares of the social gaming company fell 10% Tuesday after a Wall Street analyst said Zynga's sales are hurting as more of its players amuse themselves on smartphones as opposed to social networks. Thanks, guys, but we don't need a kick from Donkey Kong to alert us to Facebook's troubles. Furthermore, we also don't need to be reminded that Zynga is tied to Zuck's baby tighter than the 2 starfighters you get in Galaga after you shoot down an enemy alien. Don't remember Galaga or Donkey Kong? Really? Don't worry, at some point you won't remember Farmville or Zynga either. Alright, number 3, more Diamond foolishness. The nuttiness at Diamond Foods, alas, continues. The snack maker, whose brands include Emerald Nuts and Pop Secret Popcorn, sank 8% Monday after the company admitted its inability to report on its 3 most recent fiscal quarters. As a result of Diamond's accounting ineptitude, the NASDAQ will likely move to delist its stock. Wait a second. We forgot to mention that the company is also in the process of restating its entire fiscal 2010 and 2011 earnings. And silly us also neglected to say that Diamond will hold its annual meeting once it finally files its belated, restated financials. Oh man, forget Stockholm Syndrome. We've been trapped by these nut jobs for so long, we've come down with Diamond dumbness. Alright, number 2, Green Mountain's morass. Look out below, because Green Mountain Coffee is going cliff diving. Shares of the Keurig machine maker spilled 8% Monday after grocery store giant Kroger announced it was planning to launch its own brand of single-serve coffee cups later this year that would compete with the Green Mountain branded cups. The stock took another 0.5% hit Tuesday to just above 21 bucks on the news that Safeway would also be getting into the K-Cup game. Anybody else want to jump into the coffee business while it's hot? Walmart? Target? Whole Foods?
Bueller.
Never gets old, does it? Okay, it did get old 20 years ago. Anyway, the dumbest thing on Wall Street this week, Diamond's self-inflicted disaster. What a difference a year and a $2 billion loss makes, right, Jamie Dimon? JP Morgan's CEO found himself before a Senate panel this Wednesday, forced with the uncomfortable charge of explaining how his bank's London office lost billions when it was supposed to be hedging risk. Of course, the reason why this appearance was less pleasurable for Jamie than his previous jaunts to Washington, you know, the ones where he was surrounded by bailed out bank CEOs, was because in this case, Dimon set the witness table for himself. Dimon has been outspoken in his fight against increased regulations, going so far as to heckle Ben Bernanke about it. Remember that one? That was wild. Anyway, all that tempest in a teapot talk came back to bite Jamie in the assets this week as Congress's former prize pupil learned a valuable lesson the hard way. There you have it, the 5 dumbest things on Wall Street this week. Send those emails. We'll see you next time.
This market is fueled
Stock tickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to